Let's Talk Accounting answers the question, what is? Removing the jargon of accounting, finance, and business. Shedding light on some of the jargon used, clarifying the jargon into everyday words you'll understand, and get a clearer view of what is happening in your world, building your confidence in the world of business. Let's get started. Next. Number 49, what is a lease? A lease is an agreement between two parties under which one is granted the right to use the property of the other for a specified period, in return for a series of payments to the owner. Next. Number 50, what are liabilities? A liability is something a person or company owes, usually a sum of money. Recorded on the right side of the balance sheet, liabilities include loans, accounts payable, mortgages, deferred revenue bonds, warranties, and accrued expenses. There are three primary types of liabilities: current, non-current, and contingent liabilities. Liabilities are legal obligations or debt. Next. Number 51. What is leverage? Leverage is the use of debt, borrowed money, in order to undertake an investment or project. When you hear someone say they are highly leveraged, it means that item has more debt than equity. Leverage occurs only when debt is used to buy assets that can appreciate in value. Next. Number 52. What is limited liability? Limited liability is a legal concept which protects shareholders by restricting their liabilities to the value of their shares in the company. It prevents individuals from being held personally responsible for their company's debts or financial losses. If your business went under, you would not be made personally liable to pay for the company's debts. Next. Number 53. What is liquid assets? A liquid asset is something you own that can quickly and simply be converted into cash while retaining its market value, such as cash savings in check accounts. Any money available at short notice. Cash on hand is considered a liquid asset due to its ability to be readily accessed. Next. Number 54. What is a liquid ratio? A liquid ratio is a measure of the relationship between a company's current assets and its current liabilities. A good liquid ratio is anything higher than 1. A higher liquidity ratio means your business has a significant margin of safety in your ability to pay off any debt obligation. Divide current assets by current liabilities and you will arrive at the current ratio. Next. Number 55. What is liquidity? Liquidity is the capacity of an asset to be converted easily and with minimum loss into cash. In simple words, liquidity is to get your money when you need it. The liquidity of a business is calculated by dividing its current assets by its current liabilities. Next. Number 56. What is liquidity risk? Liquidity risk is the risk that an asset cannot be readily converted into cash. There are two types of liquidity risk. Number 1 is funding risk or cash flow risk. Number 2 is market liquidity risk or product risk. Liquidity risk can be reduced through conscious financial planning and analysis, and by forecasting cash flow regularly, monitoring and optimizing net working capital, and managing existing credit facilities. Next. Number 57. What is a long position? A long position refers to the purchase of an asset with the expectation it will increase in value. A bullish attitude in options contracts indicates the holder owns the underlying asset. Long position is the opposite to a short position. For example, a trader who is bullish on a company might go long on that company with the hope that its stock price will eventually go up. Next. Number 58. What is a margin? A margin is the difference between a product or service's selling price and the cost of production, or the ratio of profit to revenue. To calculate your margin, find your gross profit, price minus cost of production. Divide your gross profit by your price equals your margin. Multiply by 100 and that's your margin percent. A 10% net profit margin is considered average, a 20% margin is considered high or good, and a 5% margin is low.
If you don't know what you're doing, it's a jungle out there.
This completes the chapter. Watch this space for the next chapter of Let's Talk Accounting.